Sound. All right. I think can you guys hear me now? Here, I got my audio expert here too. I think I have the audio microphone.
Yep. So yeah, you're gonna want to change that to that.
Yeah.
And then
It's right here. It's there we go. You hear it? All right, we're good.
All right.
All right, got my audio guys.
So
I got Austin here as the audio guy.
Yeah. We're just chilling, looking at stocks.
All right, anyways. Yes, it's getting shorter and shorter. Yes, this is probably very true. All right, so yeah, basically doing the live stream here at this time. We didn't do not a capital mindset, strongman personal finance live stream today because he's going through busy season. So guys, go wish him luck on finishing that. I think that ends in April 18th, something like that. So yeah, if you guys have any questions, just let me know here, and we'll kind of talk about what's maybe gonna go throughout this week. Because it is Sunday. I know it's late, so hey, hello, good evening, everyone. If you guys are joining, hope you guys had a great weekend out there. And we can talk about pretty much anything. I already saw some interesting conversations going on. Some Mike Stathis #1, stuff like that, and Chinese VIEs from Elemento Tamago. To answer your question, Elemento, absolutely. I'm going to be begging to buy Chinese stocks with absolute leverage if and hoping that Alibaba falls below $1 million a share, something like that. He's obviously joking, guys. So, are you one offspring? No. Legitimately, several generations. So, I'm a huge mix. To be honest, like my grandfather is a whole bunch of things, anything but European, and but yeah, LNR. I can definitely add that to the list here. And also the reason, by the way, I think this is a little bit of context. The reason why we didn't have a live stream on Friday and Saturday is I actually got a new setup, and the setup came and one of the pumps wasn't working, so I had to actually replace that pump. So I was out of commission for a couple days. But yes. What happened there was between my hair, JP, is simply just decided to cut it short this time. Cut it even shorter. Normally I don't have my hair short, just decided to try it. I didn't get to do it during the pandemic, I didn't go bald during the pandemic. I didn't go bald this time, but who knows? Maybe I'll try it out, see what I look like. What do you guys think? All right, so market tomorrow, what's going to be happening, what's going to be changing portfolio wise. My strategy this week is going to be kind of adding to the same positions I've been adding to lately, hoping that Meta gets down a little bit. I mean, Meta I think is still, unfortunately, it's traded up since we were buying. Yeah, it's at $224. We'll see what happens this week. I mean, I don't think anything crazy can happen this week, but who knows? No, this is not Guinness, actually. This beer today, it's in a Guinness glass, but this beer today is actually Funky Buddha. I'll show actually the bottle here. Watch YouTube completely demonetize me now because I'm showing alcohol. But yeah, this is the beer today. It's actually really good. Void Shaker. And yeah, it's pretty good. We're totally sponsored by them. So I was paid actually $30 million to show that bottle today. So Florida Brewing, exactly, Noam. Florida Brewing. So, anyways, going back to the stocks, right? Actually, this is actually owned by one of the stocks I own in my portfolio, which is Molson Coors Brewery. For disclosure, I am long TAP, Molson Coors Brewery, and it is one of their brands. So, Williams Sonoma. Well, Julius, are we serious on that, or is that like a kind of like a joke of the roux at the end? Because interesting interesting business. What is the thesis you have there? Is it just simply the price is cheap, or I haven't even checked their stock? So, but yeah, just let me know. Okay, so yeah, I've done plenty of videos now on SRG. I've usually compared it to something like Realty Income. And Austin's favorite REIT is Agree Realty, right? And so I think Agree Realty and Realty Income, as well as WP Carey, those are of a really high caliber. So when you compare anything like that to an SRG, I think SRG is, yeah. Because here's the thing, and I'll answer your question right now, Jamie. The purpose of that conversion is that the inherent value of SRG is the asset value and the liquidation value, not much else. The actual properties and the liabilities that are connected to those liabilities, or sorry, those assets, it's actually not in their best interest to remain a REIT, because if they're not trying to actually, they're trying to go through that structural change, because I think their strategy is that they're trying to just sell it all off. And then in that instance, they're hoping that the actual value that they can achieve or realize from those properties will be greater than what, the share price is right now. And yes, okay, so 3M, the strategy with 3M is kind of alleviating a little bit off of 3M and instead focusing more on the current industrials such as Magna. Magna is the one that I'm actually going to be adding to more this week. I'm kind of taking a pause on 3M right now. 3M, I just wanted to build up a small position into 3M and just to have it. Again, everything has to do with the price action. The price action will dictate the aggressiveness of when I purchase. I build a strategy ahead of time to remove a lot of the emotions. So 3M is going to remain at its current size. And anyone who's new to the channel here, you should note that the portfolio that I'm talking about is public. You can go check it out and see all the positions and stuff like that. All right. So thoughts on Dow Transport's getting slammed with imposed fuel emission? You really think that will pass current supply chain issues? Who knows with the current political environment? But with everything, I mean, there's plenty of instances when governments actually shoot themselves in the foot in terms of a country. So I do think that that's completely possible that it happens. Would it be a good idea? Probably not. So that's all I can say about that. But hello, I'm looking for companies and financials, and they have a section called minority interest at negative 1,866. Could you walk us on through what that section means? Okay, well, specifically, what financial? Oh. I thought you meant financials, like a bank stock. No. You meant like a specifically any company. Their financials are saying a minority interest, and it's at negative. Making sure that's not a typo. Negative 1,866%. But just let me know in this clarifications to that questions. And all right, so this right. One of two. Well, watch out for your second one. Williams Sonoma is trading reasonably and have a strong business model, especially since they are getting business to business. I just think the margins might compress compared to management's expectations. Okay. Oh, and then we'll get to Julius's second part of the point when he puts it out. But thoughts on their yield curve inverting? Well, we have to see a sustained yield curve inversion. I believe academically that's like 2 to 3 weeks. But the thing is, you can kind of see or observe this potential risk of recession from a variety of ways. The yield curve is implying, something is wrong. Well, what will that something be, right? In this instance, we can point to consumers getting squeezed, right? We have food prices going up, energy prices going up. That squeezes consumer spending. And so that consumption crunch, we could say, that's probably what the yield curve might be telling us, right? The yield curve is always telling us something because it's a reaction to something that causes those yields to fluctuate in that way. Sometimes we know what that is. Sometimes we don't know what that is. And I'm not saying that is the reason why. I'm just saying that there are other things that kind of coincide with it and give us an overall picture of, as in we shouldn't be really surprised, right? We don't know the degree as to how severe this recession will be. Maybe it's not, maybe it's small, maybe it's quick, but we know that there most likely will be. And I've already been talking about this a little bit. Again, I've been pointing to consumers getting squeezed in terms of their spending, and then how that's going to draw down consumption most likely, et cetera. And also, I mean, on that topic of conversation, I will be doing kind of like a macro video on the yield curve. kind of explaining a little bit more about the academic theory behind the yield curve, because I think that there's some videos that, I mean, I'll just give my take. There's plenty of videos that do talk about it, and there's some that break it down really nicely. But I think that they should. I'll just give my take on it. All right. So on that note, yeah, going back to the stock strategies, I'm going to be adding more to Magna International. I'm going to be adding more. Still buying Netflix, but I already bought my bigger chunks here. But kind of waiting for a pullback if possible, and we'll see. I'm hoping there's a pullback on everything, but that's why we're not timing the market ever. We're just always adding and buying assets that we like, and that's pretty much it. Okay, so is it possible that the bond market isn't useful because all smart money has left bonds entirely? Specifically, what do you mean by that? I mean, are you talking about like how there's no money managers? The bond market is pricing in a bad economy, but the consumer is still extremely strong. Corporate and consumer balance sheets strong. Everyone's flush with cash. Yes, everyone is flush with cash, or some might say that they're flush with cash. There's a lot of different perspectives out there. I think that some might say that right now it appears as though everyone's flush with cash because interest rates are so low, and they're still very low. They're still historically extremely low. So I was having a conversation with a friend today about cars. How car loans, it's very easy to get a car loan. It's actually one of the easiest times in history to get a car loan, and so that's helping drive up car prices. And so it gives off the impression that everyone is flush with cash. That's one instance, okay, that we can really point to. And then, if you take a look at home prices, right? Home prices are also on the rise. It appears as though everyone has money to buy homes, right? So what would happen should we get that credit crunch? Or is everyone going to still be flush with cash? I don't know. Maybe not. All right, here's Julius Caesar's 2 of 2. So I'm hoping that WSM stock draws down to $120, $125 range. It'll be a nimble amount, and this wouldn't be a major position, though. Okay, so you already have an idea of where you're pricing it at. You're saying LNR is above Magna, so you prefer Magna. Let me know why. I would love to know your reasoning, and then I'll actually highlight your comment here. Okay, I would appreciate if you help us all better understand what minority interest means in the context of the financial report for a company. For more context, this is an oil and gas company. And 2 of 2. And if possible, what a negative number in this section could mean. So if it's a negative number, I'd have to take a look at it because they would have it in their notes. But for a company that implies that they had like a loss in that account, not well, obviously, but as in that ownership in that stake, whatever it is that they're recording a loss in the consolidated income statement. I assume it's an income statement that you're talking about. So yeah, let me know if that's it. But it's usually recording a loss in a stake in another company. That's why it's called minority interest. And then if they own a certain or pass a certain amount of that entity, they have to actually record it slightly differently. But as long as they own a non-controlling or minority interest, they actually will call it like that, and that's GAAP accounting standards. But yes, if it's a negative number and it's on the income statement, what that's recording, and I think it's most likely the income statement. Thank you, Lix. It's just recording that business in and of itself has a negative number. All right. Or not a negative number, is a loss in that business. All right. So clarification. I'm talking about U.S. Treasuries and negative interest Euro bonds. The only reason anyone buys bonds is regulation and speculation. It's not a real market. There's also the context of liquid instruments, highly liquid instruments, and high value collateral. Collateral is a huge reason. And if we also can kind of think about it, we can walk through a thought experiment with a bank, or at least kind of like primary dealers, and why it is that they would buy bonds. I think that would be a really good conversation to have, like its own video, but we can get into it if you really want to. The 3 and 5 month year is actually steepening. which hasn't been seen since the 90s, which is a expansion phenomenon. Yeah, that's true. I mean, that's why it's well, nothing right now is definitive. And again, like that's why I say when the yield curve inverts, it has to be a sustained inversion. And I think academically, I don't remember. I think it's like three weeks or a couple months. I forget how long exactly academically. But again, there's other things we can kind of point to though that should kind of point and say, well, there's some troubles here, and they could cause a bit of a drawdown until something happens on the other end and we kind of get out of it. But again, I'm pointing to food prices rising, gas prices rising. That's money that consumers have to spend, and then that's money that they don't have as much to spend on other things. And again, how much is the spending on these other things such as cars, housing, etc., have to do with where rates are at the present moment. And exactly, Lix is right. It's class 1 collateral. Okay. There's all these new ones that came up. You guys caught up on me. All right, let me go with this one first. Thoughts on overstock being less speculative given that the recent developments? Yes, it is. Yes, it is. But the reasoning for why I'm invested in it is, in my opinion, something that I cannot classify. Even though, let's be honest, if you look at the size of overstock within the portfolio, you could argue that it's sized like a bigger than some core holdings, right? Which then you say, is it truly a speculative stock? Well, maybe not, right? But it's a high conviction speculative stock. Just because it's in that category doesn't really dictate exactly how much I will put into it. I have a rule for myself that I won't dedicate more than 10% of capital to speculative assets, right? But let's say I could have one speculative asset. I could say I wouldn't really do it, but hypothetically speaking. And so I do think that the conviction behind overstock is increasing more and more and more. But the recent developments are really interesting. And no, I'm not going all in on Netflix, even though I am acquiring a decent amount of Netflix here and there, and I'm still continuing to. All right. Thoughts on Charlie Munger buying WWE stock? I'll have to take a look at that, but that's really interesting. I'll take a look at that because WWE, big media business. Probably he sees something in it. Yes, and Licks class 1 collateral. How old are you? I am currently 24 years of age. What is your strategy for investing in high inflation environment? I am personally an overweight in gold stocks and oil stocks. Well, I have oil and commodities right now in the portfolio. Again, it's public. And I'm kind of toning down. I'm trying to actually take profits off of my ConocoPhillips, BHP, and also trimming up Rio Tinto. So I'm kind of changing away from that. All right, I'll actually give that message to him. Austin, you are a beauty for accepting JP's LinkedIn request. Okay, he thumbed up. All right. I'll have to take a look at this one. PBR. So, this company. Okay, so that's the Brazilian oil giant, right? And the thing with Brazil is I have my hesitations about Brazil. I have a Brazilian wife. My wife is Brazilian, so it's nothing like personal against Brazil, but it's a different understanding of the business environment. So taking a look at PBR, it looks cheap on pretty much every metric. Like you look at the PE ratio, 4.38, but there's all these other adverse risks with Brazil that if they don't pan out, it will do good. I think Sven Carlin did a video recently on like StoneCo and stuff like that, and he kind of addressed those concepts. Because I was like, be careful, Sven. If you don't address it, I'll disagree with him on that. But he did address it in the video, and so I was very happy to hear him say that you got to be very careful with these Latin American companies for a variety of reasons, and one of them is the macro risk, the overall macro risk, and I think the same thing goes with PBR stocks. So with PBR, you have to be very careful and understand that there's a lot of political uncertainty. Remember that my home country, Venezuela, we fell to socialism, and very much so. Brazil could follow that same path. We have like Lula, who actually might win. I think he's going to win personally. My wife disagrees, but I think he's going to win. And he was very good friends with the president, or whatever you want to call him, the guy who did what he did to my country. And so if he takes over, he can do a decent amount of damage, and we can have to see it's a risk that you take by investing in that country. And the institutions just aren't as strong as they are here or in Europe, etc. All right, so Capital Mindset owns Alibaba, and also he owns no speculative assets. We are making progress towards acknowledging Baba as hard money. Yeah, I will be able to go out one day and trade Alibaba shares for different goods and services. That's exactly what's going to happen. You wait, guys. Just you wait. Like, for example, Elemental Tamago, what he was saying earlier, when Alibaba is above $1 million a share, I'm going to hope and wish that it was below, and I wish I put in 500%. I'll up you 500, not 200% leverage, 500% leverage. And then I'm going to be able to go to the grocery store and trade Publix or Ingles or, Albertsons. I'm going to give them Alibaba stock in exchange for my milk, right? That's what's going to happen. I'm telling you. Watch it. All right, nice surprise to see you stream this evening. What are your thoughts about online banking businesses like EQ Bank? Online banking is 100% on the rise. I have New Bank, which is a Request. It's a Brazilian bank, another Brazilian stock. And the thing is, online banking it's the future, bro. No, okay, but no, it is in a huge way, because it's convenient. These newer services that are coming out, their UI is much more favorable to the average person. Very easy to use, and these new. A lot of these bank branches, sometimes it is annoying to actually go to them, but sometimes it is nice. Like I personally, I like to go to the branch. I like to go to the branch. I like to have my guy that helps me with pretty much everything I need. I can call him up and say, hey, I have this problem, and he'll pretty much help me with almost everything that I ever have a problem with. And that's the nice thing about having a relationship with Chase and Bank of America, and I think Wells Fargo might have the same thing. All these banks have kind of like the same thing, but with banks like, for example, let's say Sofi, which is similar, I guess, in a lot of ways to EQ Bank. There's for me personally, there's not much an incentive for me to park my money there, because there's not really a super good treatment, right? That I know of. Let me know if I'm wrong about that. I haven't done the Sofi video, so I haven't actually done the research into specifically what are the benefits if I decide to put my money with Sofi, right? Do they treat me any differently? Do I get any benefits per se that matter, right? There's some benefits I don't really care about, but the benefits that matter. You see, I just believed Julius. I fell for it. All right, Stathis is the man and a proven reputed top pro. Okay. Do people institutions actually invest based on the company's ESG scores? And if so, why? Some do. Some do. And okay, so there's an actual reason or an argument to ESG. So the argument behind it is that if you score highly on ESG, you, like, for example, one of the, right, so high governance score means that you're running the company well, you actually care about shareholders, right? That's an example. And then also, if you have a high ESG score, they believe that there is a tendency to actually show that you won't have much of a problem in terms of with the legal implications of something, right? So you're not likely to be scammy, let's say. So that's some of the thought process. It's not just all anti-woke arguments, right? Or woke arguments. Okay, that's like the reason some people will defend ESG. Okay, and I can see it, but yeah. Okay. Yeah, I mean, see, like that would be something that I agree with, right? Because that's an acknowledgement of the riskiness of the political situation, the overall political situation within Brazil, that it's not the same as investing in Europe, Australia, North America. The rule of law is a little shakier, to say the least, and so is the business environment. And for example, I think StoneCo specifically says this in their 10K, because they are publicly traded here in the United States, that they are headquartered, or they're based out of the Cayman Islands. And they say that, if something ever happens between you and the company, you can't really go after them. There's really no recourse for you. But yeah, it's interesting that they say that. Probably something concerning you in the, well, yeah, like I was saying before, what kind of concerns me right now is watching how consumers are reacting to these rising necessity prices, right? And that's energy, food, and how that might ripple, how that effect might ripple into the rest of the economy, and including, consumption on leisure and stuff like that. So that's a little bit concerning. CRM is one of the greatest businesses of all time. It's on the watch list. I will say this: my wife owns CRM. Right? I don't reveal her portfolio because that's private, but my wife does own CRM. Right? She's owned it, and she's done really well. Her portfolio is actually really interesting. One day, maybe she'll reveal it. She will have to decide that that's in her best interest. But if she doesn't ever want to, I'm not going to ever make her. Okay, is there a way to value Sofi or other unprofitable? Yes, there is. So with all unprofitable businesses, it's about thinking about how it is that they're going to get profitable and by how much will they be, and depending on what year, how far out into the future will they get profitable. So I'd say SoFi. SoFi is going to be a very difficult business to kind of uh, predict when they're going to get profitable. So some businesses are going to be a little more difficult than others. SoFi is going to be one of those that's more difficult, and it's a business that it has all this like hype around it in terms of the stock, has perhaps maybe a lot of customer excitement because it's new. They have this different media deals, etc. So they have a lot to gain, but whether or not they'll execute is a different story. And the way, again, in summary, of how you evaluate an unprofitable business is find out when you think they're going to become profitable, by how much. And you also have to try to understand how much is the negative profitability going to be, but after the tax shield. All right. So a tax shield is that potential benefit you get from writing off a loss in taxes. And that actually has a value for a certain period of time. So you actually have to take that into account as well. That's if you want to be as most accurate as possible. You can kind of fudge it a little bit, and you might be not as accurate, but you can still work with it. Bobby, you look like you just returned from the army, bulked up, and this haircut. Well, the bulk is I've always been bulked, but the haircut, yeah, is different. I just decided to cut it short this time. But yes. If you get a warm blanket, all right. Yeah, that's the thing. I don't think, like, for example, what is the benefit that I would derive from joining the bank, right? From the perspective of the consumer, right? Okay, sure, I get higher interest rate. Sure, I get whatever. But do I get any conveniences that I wouldn't get, for example, giving Bank of America? Like I've discussed this on the channel before. For example, after you have a 20K with Bank of America, you start to get, for example, already the no fees and stuff, but you get boosts on your cash back and stuff. And then when you have over 100K, you get 75% boost on the cash back. And that equates to about 5.25% cash back on the highest category on the red cashback card, which, is pretty great because it's a no annual fee card. All right. Not to get into a credit card topics, but as an example. And then all these other things, like I think you get Chase Private Client after 250K, and that's like a guy that's dedicated to you or dedicated to a couple people, but he's going to help you with pretty much everything. All right. Yeah, cost of capital and cost of equity. So, are you referring to the account? I think you're referring to the accounting terminology. So, the cost of capital in a broader sense is the cost to acquire money or currency or whatever, a measure of exchange, unit measure of exchange to build your business, right? But that could come from debt or that could come from stock, right? So whatever way that you acquire said capital, that's what we call the cost of capital. And then the cost of equity per se, if you're referring to just simply the stock, is quite literally the stock of issuing said company, right? So if, like, for example, your stock is very expensive, your cost of equity in that sense should be less. And then because you're splitting up the pie, but you're getting a good amount of return for splitting up the pie. But then the cost of capital per se, you expand that and say the debt. Well, the debt, you get an interest rate of 10%. Well, that's the cost. But then what's the cost if you were to, get your or issue stock, right? Well, that has a cost too. So what's the total, or what's the weighted And then you can get the weighted average cost of capital, which is another measure. And then you take the weighted average issuance of both, and then you take that. And some people you would use WACC for different reasons, but some people use WACC for the discount rate. You can use WACC for discount rates, I think, for projects, right? When you're trying to say, oh, we should do this or we should do that. But yeah, let me know if that answered your question. Kind of just went on a broad brushstroke. Fabio, what do you think about the U.S. letting Ukrainians in? I think you've asked me this before, Andrew, and I think it's good in the sense that, you know, when these events happen, you get a huge brain drain, and like, I mean, the U.S. lets a lot of people in every single year. U.S. is actually a very, very, very generous country for letting people in. Okay, so I mean, it's just going to be the same as every other year. Maybe like a little bit more, right, in quantity, but yeah. All right, so what's this? If you reduce diversity, you will usually underperform due to Pareto principle. This leads to embarrassing results, female, minority, ESG, ETFs doing very badly. I think it's a bad strategy. Yeah, you see, like I said, I don't do an ESG focused form of investing, but for me, it's kind of like more nuanced. I don't care. That's why usually I see that and I say, oh, that's a pat on the back slide. I don't really care. I just toss it to the side. I could care less. But I look at it in isolation. Like, for example, I care about governance is how the management team executes. I care about social, that they don't piss people off. Right. And then I care about, you know, environment, that they're not doing anything that's going to cause like legal action against them. That's the extent of I care. See, I just made my own ESG, but they take what I just said and they take it, you know, a little further than that. But that's how I would have my own personal ESG. And I think those are very reasonable. Like, I wouldn't want any of my businesses engaging in any of those things. Like, I wouldn't want a company to have terrible management and not liking me. Again, ESG, some people argue that that's what governance specifically means. Like, no, governance, they take that and they add that in there, but then they go a little further than that in ESG investing. I got to say, for those of you out there who are Big Four auditors, ESG is the best thing to ever happen to you, because now all these companies have to pay more for their audits so they can be ESG audited. And the Big Four are definitely loving this. They're like, yeah, ESG, that's a good thing. We should do more ESG. And we should totally audit you guys for your ESG. And then, yeah, here, Spaceland, he made a good point here. I think the cost of capital and cost of equity is the same. No, just cost of capital encompasses debt and equity, whereas equity only encompasses equity, more or less. Great. What is your motivation for presenting investing information on stocks other YouTubers don't talk about at such a young age and your whole life ahead? What do you feel you get in return? Entertainment. I like talking about it. That's quite literally it. So yeah, because what you're probably referring to is that, you know, in talking about these smaller businesses, I won't grow as fast. That's fine. This isn't like my primary source of income by any stretch of the imagination. This is like a passion project in which I can engage with you guys, and I don't have like a rush to get to the end, and in doing so, I think I can provide more value, which is, like, again, the goal of the channel is actually to provide value. So for each subscriber I get, I hope to provide value to them. And how do I provide value? Well, not just repeating information that everyone is already saying. And sometimes it's like they're all repeating bad information, in my opinion. And so I don't think that provides value. I think I want to provide a unique opinion that you know, can have a positive impact, and you know, in that sense. But yeah, I think that's what you're referring to. So it's more of a passion project than anything. My wife is not a professional investor, but heck, if I showed her portfolio returns, you'd probably think a little bit about that, because she's done really well. She's actually done really well. I'm really surprised. Yeah, and you know what they say, like, are women better investors? I don't know, maybe. Maybe. She's accidentally, like, by complete accident, I won't say the stocks, but she's accidentally, like, timed some stocks. It was actually hilarious. Like, she'll say, like, oh, you know, I think I'm gonna take some profits on this stock for no reason, like, not really like a coherent reason as to why she's like up on the stock in particular. And then she sold the stock, and then I think like I think I said to her, it's like, oh, you shouldn't sell. You should, let the returns compound, whatever. And then she was already like, she had long-term capital. Well, no, actually that was in her retirement account. So we're not even gonna have to pay a tax bill on that. But then like, I think a couple months later, it collapsed like 40%. And then she bought it again. Oh, no, not 40%. I think it was like 30%. She bought it again. She's like, oh, now it's a good price to buy. And I'm like, no. It doesn't work that way. And then she buys it anyway. And then it goes right back up to that old price. And I'm like, you know what? You just keep doing what you're doing. Don't listen to me. But anyway. Right. Small beneficiaries to park your money in online banking are no transaction fees and small interest rate of 1.5%. For people that have money, it's no big deal, but for others, it's an incentive. So that's the thing I agree with. I absolutely agree with that. So, when you have like the underbanked, right? The underbanked are the people who don't have bank accounts and stuff. They don't want fees. They don't want fees. I don't want fees. I don't want to pay a single dime. I don't want to pay a penny in fees to the bank. I want to use my bank for transferring stuff and convenience, and that's it. But here's the thing. A huge thesis, for example, of Sofi is that they're targeting higher income individuals. Well, if you're targeting higher income individuals, what is the incentive for higher income individuals to park money in your bank, right? To engage with you in services? That's what I want to know. That's within the context of my question. I should have been more clear about that. The context of my question is within that regard. A huge piece of the bullish case for SoFi is that they target the higher income audience. So if there isn't really a reason for me to engage with them or high net worth individuals to engage with them, why is that thesis hold any credence, right? Why not? In what way are they competing with Bank of America? Maybe they're not competing for the high net worth individuals. Maybe the truth is they're competing for the lower income brackets, which is all fine and good. You can make lots of money, but then that changes the thesis quite a bit. Okay. But yes, PB, P believe ratio. My brain like completely stopped and reading that. I was like, wait, no, what? I'm misreading that. No. Yes. Wow, that is a beautiful comment. Price to believe ratio is the only way to measure unprofitable cash burning and or value companies. Very underrated. That is amazing. Price to believe ratio. Julius, do you mind if I take that? I'll credit you in this channel, but my alter character is gonna take that if with your permission, because that is beautiful. Wow. Oh my gosh. Yes, he's all of our heroes. Have you ever traded penny stocks? I think at the very beginning of my investment career, when I was just getting started investing when I was in high school. Yeah, I think I did. Well, actually, no, I think I told the story of uh, when I was in high school. One of the first massive introductions to the stock market was in a class of mine where we did a competition of sorts for stocks, and I had no idea about anything. And I had literally, we were all given fake money, right? And $1 million, and I bought $1 million worth of this hazmat suit company, and it was a penny stock. And turns out that penny stock had got chosen by the United Nations or whatever. No, I like quite literally had no idea what I was doing, and I won the game just by accident. And the company that suits to provide the World Health Organization when they were going off in, I think it was like Ebola, something like that. So yeah, that was the only one. But no, in terms of like ever putting raw money into penny stock, no. I'll talk about one that a very close friend of mine did, and it's called Delcath. I think they're bankrupt now, so that's why I'm even mentioning them. But let me make sure that they're bankrupt. By me mentioning them, by the way, is in no way, shape, or form a um, yeah, they're still here. Oh my gosh. How are they still alive? Anyways, by me mentioning that, there's no way, shape, or form am I saying they're a great company or anything like that. And I'm not saying that they're a fraud. Lawyers out there, not saying they're a fraud. But there was a company that he had purchased, and I forget the day it happened, but I remember what happened that day. He bought it, and then it just skyrocketed. And I told him, take your profits, and he didn't. And then the position went to worthless. He lost all of it. So if this friend is watching, he knows who he is, and I feel sorry for you. But have you ever day traded stocks / penny stocks? Okay, day trading sometimes like by accident, or like sometimes like for fun, but like not in a serious way where I was actually looking to make serious profits from day trading. I don't like to look at the market all day, every day. I kind of like to be a little bit more passive. I like to research companies. I can do that all day, every day, but I don't like to like look at price actions all day, every day. I like to kind of just find a company I like, buy it, hold it, forget about it. Don't really talk about it. If you notice, a lot of the videos I do on this channel are not even about my stocks. I don't really talk about my stocks that much. I'll talk about stocks when there's something significant happening or there's a change happening. I don't really like to talk about my stocks too much. There's a lot of videos, or not a lot of videos, a lot of stocks that I own that still have yet to have a video done on them, right? Because I don't really promote them, or there's no reason to promote my stocks, right? It's not like I have high short interest stocks, with a huge YouTube followings, and I'm trying to get that short interest or short squeeze. You know who I'm talking about. So I'll take a look at this, Japs, because you're pumping this LNR, right? LNR, capex. Okay, you're giving me these calculations. I'll have to come back and take a look at this if I do a video on LNR. All right, so okay, capital mindset. I got a stock I'd like your opinion about. Go ahead and give it to me. I guess it's you put in your next comment there. Any thoughts on China paying for Saudi oil in yuan and Russians demanding to be paid in rubles for gold or for gas? We are seeing another Bretton Woods moment. Are we headed for? Okay, so I actually mentioned this in Strongman Personal Finance's last live stream, and I think a couple videos before that as well. That's the main risk I see with all this but that's like a longer term risk, guys. It would take a lot to actually topple the euro dollar system, but not that it's not impossible. And the Chinese government and Russia to an extent, but mainly the Chinese, if you actually look at the longer term picture of what Belt and Road is and their influence in Latin America, their influence in the Middle East, it is to try, right? Not saying they'll succeed, but try to topple the euro dollar system, or not the euro dollar system, specifically the dollar system, the dollar's dominance. And in a kind of philosophical sense, your greatest strength is also your greatest weakness. And the United States' greatest strength is the US dollar. So, and then the US military, but the US dollar. And so if you can topple their strength, then yeah, you can kind of bring the country to its knees without firing a single bullet. Of course, some might say that's what the military is for, is to protect the dollar, but we won't get into it. Okay, they were a bit under $1. This is Elemento's previous comment asking me if I could look at this. I'm a little hesitant to always look at penny stocks, especially like live, but all right, they were a bit under $1 and they're massively diluted below market price. Then they recovered to 60 cents. Okay, you have to tell me what this business is. I guess it's down there. But yeah, let me know what this business is. Okay, it's really nice filling in the gap. Yeah, like that's the whole point. This channel, I try to just basically drive myself off of subscriber requests, and try my best to keep up with them. But it's not to get or do videos about stocks that get a lot of views, right? It's just about doing stock videos about stocks that I think there's something to be said about. Okay. Oh yeah, yay, big four. All this talk about long-term capital gains. Last in Singapore with zero cap gains tax. Yeah, we're jealous. If you see us hating on you, it's because we're jealous. Okay. I would love that. But anyways, hey, just got here. What's going on? Well, we're just answering questions here. If you have any questions, leave them down and I'll try to get to it. You have my permission. Okay. I'm taking it 100%. 100%. Price. I gotta remember it. What was it? Scroll up. How can I forget already? All right, you got it for me? Yeah, price to believe ratio. There we go. Thank you. I will. Okay, so let's see here. Let me recover where I am. You got lucky with a penny stock called HMMB, formerly known as TS, $100 and made 1,000%. Oh gosh, wow, that's crazy. I mean, I don't know many people who approve of penny stocks, first of all, but do you plan to speed up your viewer request? Really love these videos. Okay, so I had a little bit of a hiatus. Because I was getting a new setup, and then the pump wasn't working. I explained this at the beginning of the stream. The pump wasn't working, and so I had to replace that. And so I was actually out of commission for a couple days. There's no way for me to make a video until everything was up and working again. But now I'm up and working again, and so and also now I can actually render a lot quicker than before. So I can actually get videos out a little bit quicker now. Hey man, thank you for joining us. Hope you have a great one. Can I buy your course? Well, it'll only cost you $20,000. That's how much the course will cost, $20,000. And by the way, you can't actually buy the course. You rent it per day. So it's $20,000 per day. I was thinking originally about making it 20,000 per second, but I thought that was too expensive. So I lowered the price to 20,000 per day. I think that's a reasonable price. So let me know if you guys would totally pay $20,000 per day. 20,000 per second. I know that's egregious. So per day is fine. When someone has huge gains on a stock and they say they won't sell because it would be a huge tax bill, if you don't sell, how do you take advantage of your gains? Well, it depends on how much money you have. Because if you have a lot of money, then the bank will be more than willing to give you a loan out against it. But even then, it's all a delay game. You're not actually removing the tax. The tax will just be realized up until the point. Of course, then there are ways to continuously borrow, but even then, you're always still just delaying it and delaying it and delaying it and just pushing it off further and further into the future. So, yeah, I would say that I get the underlying premise of your point, which is you can't actually touch the gains. If you're thinking about just buying and selling, you can't just touch the gains until you sell. And you haven't actually made any money until you sold. So, absolutely. Oh, okay. This is to BP. I always do that. The company is farming. They are a mushroom bamboo wood company, essentially agriculture with significant fertilizer cost exposure, trading for under the liquidation value. I'm literally going to add that right now to the list. I'm going to take a look at it. If it's too small, I'm just going to give you a warning ahead of time. If it's too small, I won't make a video about it, but I'm going to look at it and then I can get back to you if you ask me again on a live stream. But I won't really, if it's a little bit too small, it's not going to pass the criteria for me to make a whole video on it. All right. Hey, Bobby, what are your 2 cents on Airbnb stock? If you can, please. If not, all good in the hood. Or what about Robinhood stock? But anyway, Airbnb, oh my gosh. Okay, so great business. They basically they have no underlying risk as far as the assets go. They don't have to hold the asset. They don't own the asset. And that's also the drawback, because at the end of the day, their control lies with everyone trying to choose them as a platform. They could benefit from network effects, so that's good too. But looking at Airbnb, as far as the profitability longer term of this product, it could serve to be something that is extremely profitable, as it is just a platform, a sort of intermediary between two people trying to exchange, in this case, a property for a short-term rental. So if we see the world recovering, the only problem then I see from there is legislation risk, right? What will happen if the world starts to really crack down on Airbnb? Could they surpass that? I think they could. So then from there, it gets down to the question of, when do I think they'll achieve profitability, and how much will they be profitable by? And what's their moat if they can achieve that network effect? Will the other competitors come out in a strong enough fashion that it could be a number 1 or number 2 or number 3, or will it be kind of winner take all? Those are the questions that begin to kind of jot my mind. And I guess that summarizes my 2 cents. Okay, Eurozone inflation. Germany reportedly grocery stores will raise prices 20-40%. UKR, Russia to blame. Yes, because well, for food specifically, and I think I mentioned this in another live stream or another video at some point, but I mean, in my household, we did buy a lot of food, not like prepping style, but we did buy a lot of food under the impression that food prices could probably rise because both Russia and Ukraine, they are heavy or large potash exporters, and by us putting sanctions on them, they actually felt more the need to actually put pressure on us in other ways. And one of those ways is potash, but they can do that by, kind of holding off their reserves or their supply in some capacity, or just making it harder for us to get it. And that uncertainty could would drive up potash prices a lot, and we kind of saw that with Mosaic and other companies. And you still have the larger producer in the world. I think Canada is, and so, but they can't fill the void, right, necessarily. So that's going to then drive up food prices. And you have to understand or remember that United States is known as a breadbasket nation. So you have several breadbasket nations across the world. I think China is a breadbasket nation. United States is a breadbasket nation. Brazil is a breadbasket nation. These are the big countries that I can remember off the top of my head. And with that being said, United States won't experience the same level of increase because we produce so much food. We actually burn a lot of food, funny enough. But something like Germany is not, from my understanding, a breadbasket nation, so they are going to be more susceptible to that. But yes, I think maybe sure. Loved your analysis on MGA. In your video, you haven't mentioned the exposure to Russia. I believe that they have a plant there. Does it concern you? Any thoughts on other Canadian companies? Not off the top of my head on any of the Canadian companies. I think some of your crown gems, I don't know if you're Canadian, if that's what you're asking, but for Canadians in general, I think like the crown jewels of Canada probably is Brookfield Asset Management. I think Magna, you could consider Magna. I don't know if you guys consider that a crown jewel. Shopify, misspoke there. Shopify and what's that? Well, RioCan is like your REIT crown jewel in that sense. And there's also Granite. I think Granite is Canadian as well. Granite Industrial Properties or whatever they're called. And obviously, like dividend investors love the Canadian banks for some reason. But those are just some Canadian stocks off the top of my head. I think Granite is really interesting in terms of like their business. Industrial properties are really in more recent times very desirable. If you want to buy private commercial deals in for example warehouses, you're going to get lower cap rates. They're very desirable properties, especially where I'm at. Other Canadian companies, I mean, Shopify, I've already done a video on that. Brookfield Asset Management I'm out of, but again, that's a crown jewel of Canada and very good business. Oh, you have Constellation Software. I think that's another one that's in Canada. That's another good business. I'm not sure about the stock price right now, but it's a good business for sure. Okay, so you guys are encouraging some debate going on here. What is this? Okay, so I mean, I know this is the man that tried to set up a previous debate and it did not work out, unfortunately. But he's trying to set up another debate. I see. Okay, so on the dilution. Okay, so you wanted my thoughts on the dilution. Okay, so what I'd say is ask me next time. I'll take a look this week. I'm gonna do my other live stream again on Tuesday, and then hopefully, if everything works out well, I'll have another live stream Friday, Saturday. By then, I should have already seen this stock or looked into it, and then I can give my thoughts on it. But yeah, maybe it is a rug pull. But yeah, I haven't taken a look at the stock whatsoever. Okay, hi Fabio. Have you thought? Okay, royalty music. They're great businesses because it's similar to the characteristics that I was brainstorming about Airbnb. So Airbnb being a platform is this intermediary. So they supposedly are going to have great profit margins because they don't actually have to buy the asset, but they can draw. That's a they kind of help or aid in the production. And then they own the rights to the music for, I think, for a decent enough time. And with that being said, the work is done in the beginning. And well, I guess you could consider like the legal work and defending it and stuff like that. That's work. But for the rest of the foreseeable future, as long as they own it for the time period that they own it, they can just keep drawing profits from it at essentially no cost after that. And we could say that there's costs involved in protecting the rights to that music, lawyer fees and the like. But they're great businesses. It's just getting them at a good price. Growth wise, I don't know going forward because I say, for example, I think Spotify should become their own owner of music, or Apple Music, the same thing. I think that the era in which there are all these record label companies is kind of going to end, maybe my speculation, and that Apple Music and Spotify are going to go direct to the artist and try to have the artist be protected by them, and then they kind of co-share the music and the like. Okay. Why are you saying this, Spaceland? Am I grifting? Who's saying I'm grifting? Oh, okay. So we got a comment. Is it this one? Space on Mike Seth personally, but I know that they would never debate Fabio or Softman in their platform because Stathis has integrity and not contribute to their grift. Okay, well that's fine. If he doesn't want to debate, no one is forced to debate. I'm kind of just open, and debating, discussing is what is. It's all the same. It's all the same. People don't want to. That's fine. I'm not. No problem, and no worries, man. Ticker for what? And your bank's okay, so you are Canadian. You've given me all the information I need to know to steal your identity. Oh God. This is getting funny now, but I know what he's referring to. He's referring to the Chavistas. So a little bit of context with Venezuelans that BP is referring to. And it's okay, I can say this because I'm Venezuelan. A lot of the Venezuelans who have a lot of familial wealth in South Florida, specifically the Miami area, they actually are ex-supporters of the Chavez party. And we call them in Venezuela Chavistas. So they were the most interesting group of socialists you'll ever see because they're extraordinarily wealthy. That's how all socialist countries are. What essentially occurs in a socialist nation is wealth just coagulates at the very top, like at the very, very, very top. And you're basically end up in a situation where you're born into your situation. There's no churn. Like United States, by the way, for those of you guys that didn't know, has perhaps one of the highest churn rates of the higher classes of pretty much any other nation. And if you ever wonder why, like, if you get to the really top, you're going to want regulation because it kind of keeps you there. So anyway, that's a different conversation. So what BP here is referring to is in South Florida, there's a lot of very wealthy Venezuelans, and not all, but like I could say really high portion of them are known, what we call them as Chavistas. Again, they supported the Chavez regime. And then funnily enough, they left Venezuela and they're in here, but they also, they still have connections in Venezuela because you could say that they're one of the most ultimate grifters of all time. The Chavez regime and the current Maduro regime, if you want to say like a legit grift. But as far as your comment towards my particular family, BP, I wouldn't say that, but yeah. All the banks, JP. Oh, and by the way, I hope everyone understands. I don't take offense to BB's comment. I take no offense to anyone's comment. Ad hominem attacks on this channel are more than welcome to be directed towards me. I'm not saying that your comment was necessarily ad hominem. I'm just saying in general, ad hominem attacks are welcome towards me. That's why if I ever have a guest on this channel that is form of a debate, no ad hominem attacks towards them. I'll tell them like I can't control you guys, but like. They can bring on their guests and their guests can ad hominem attack me. I don't really care. I think, like, for example, if you know what you're not talking about and you're confident in what you're saying and stuff, you have nothing to really hide. You can take all the criticism you want. All right. So all the banks. Oh yeah, JP, I think you're also Canadian, just completely going to what's it called? I forgot the name for it, but yes, you Canadians, you love your banks. Okay, here's another one. So to add to the conversation, this is another apparently great Canadian company. I haven't heard of it, but it sounds like interesting name. Okay, wait, there's a lot of commentary here. What is going on in this conversation? Venezuelans are famous for having money. Yeah. So that's actually that's true. Most Venezuelans, but not all, but most Venezuelans are kind of poor because essentially they lost their entire generation of wealth was absolutely evaporated. And so, yeah, it's difficult because they're kind of starting from zero. Again, unless you're like of the Chavista regime, then yeah, you're not starting from zero. You're kind of working off of everyone else's money that was kind of looted. If you can't tell, I don't like Chavistas. I'm sorry if you're a Chavista. If you're watching this video and you're the child of the Chavista, I don't have anything necessarily against you personally. Just so you know, I wouldn't say that I blame the children of the Chavistas per se. I went to school with some of them. I know that, but I'm not friends with any of them. I couldn't get past that part. All right. So, for example, your gains on Google and it being your largest position in the portfolio, would you take a loan out on that position? What is your psychology maintaining that position? Oh, because right now I don't think Google is like an egregiously overvalued stock. If it was egregiously overvalued, absolutely I'd sell. For example, if I had, I did do this actually. So this is a case study. I had Shopify. And Shopify, it got to the point where it was in an egregious overvaluation, in my personal opinion, and then I liquidated the position. There was no ifs, ands, or buts. I wanted to take those profits, realize those profits, and then get out. And sometimes, depending on the situation, again, everything is nuanced. I will be a little bit more aggressive in terms of taking profits. Like, for example, ConocoPhillips, BHP, Rio Tinto. I'm kind of like easing out of those positions. I'm not in no rush to just say all of it gone tomorrow. I'm kind of easing out of it because their evaluation is not as egregious. They're not egregious. Another one was Mercado Libre. So that one is a business that, again, got to an egregious overvaluation. And, you see the theme there. My previous portfolio way back when was originally or initially invested in a lot of e-commerce stocks, right? And that was the kind of like a theme. You can kind of tell by Mercado Libre, Shopify. And Amazon is a relic of that time period as well, because I started buying Amazon around the same time I bought those guys. And it's remnants of Amazon still remains because it's not egregiously overvalued. Just not buying it, right? All right, so Canadian Railways. Oh, how can I forget the Canadian Railways, guys? Canadian Railways. Yes, that's another big one for Canadians. They love their Canadian Railways as well. All right, so here in Texas, we call that big cattle. Okay, so I guess I don't know if I should highlight your guys' conversation with each other, but right now there's a conversation going on about Venezuelans. I feel like this is and JP is right. This is actually how all my money was ever made. Fabio made his money from his dealings with Cuban looking buddy, from what I heard. Yes. So the guy who comes on here sometimes, we know him as the Cuban drug lord. And he is totally not a drug lord. He just has that name, but he's totally not one. And he totally does not import his drugs from Miami. He does not do that, FBI. He doesn't do it every Thursday at 8 o'clock, the Miami pier. He doesn't do it. Anyways. All right. What is going on with this conversation? He stole money when he was a child? What is going on? Is this about me? What is the context? Is this... Wait, all right, I gotta read this context. I guess it'll be funny for you guys. There's a lot of Venezuelans that stole a load of money from Venezuelan government, from its people. Now live in Miami area. It occurred in 2000. Yeah, okay, yeah, that's what I was talking about. Most Venezuelans in Florida are broke. Absolute fun. The cursing, the PG-ness. No, I'm kidding. You guys don't have to keep PG. You guys are in the comment section. All right, let's say in Google, it's Tesla that you huge gains, but don't want to pay the tax. How would you manage that when one bad earnings could drop the stock, a la Facebook? Well, the thing is, with Facebook's a good example because I had some Facebook, right, in the portfolio. And then what I did was I took advantage and I added more Facebook. I grew the position as it fell. So what I guess you're referring to, because I didn't sell Facebook at 300. I had Facebook and I didn't sell it. I had it as a smaller position. And as it came down, I added and grew it actually into a more full position. And again, you can see the size of the position in the portfolio. But I'm trying to, I get, by the way, the premise, right? So If you have huge gains but don't want to pay the tax, how would you manage that when one bad earnings could drop the stock a la Facebook? All right, so okay, let's think here. To answer your question, let's say instead of Google, it's Tesla, that you have huge gains. Yeah, okay, so I'm gonna get into my mindset and I'm gonna put myself in that shoes. I have Tesla, I have a lot of gains on it. At the present value, I'm not gonna be that guy that to hold Tesla. I'm telling you that right now. I'm not that guy. All right. Definitely, that would not be me holding Tesla right now at $1,000 a share. I would have sold already. So because at this point the valuation is not something I can confidently project into the future, so it doesn't have a place in my portfolio. Just simply doesn't. And let's say I have those gains built in. Absolutely wouldn't really be selling. Or sorry, would be selling right now. So I would take the hit on the capital gains. I don't want to play with fire in that instance, and I think that's what you're getting to. I would rather sell it, take those profits, than borrow against it and take that money and then go spend it. No, because especially then, because I borrowed against an asset at this current valuation. What that's thinking that the current valuation isn't egregious. The valuation is egregious right now. I would never borrow against it. No. I'd sell it, take my profits, and I'd be out, and I don't care about the tax. I'll pay that tax. I don't really care. I made more money in that instance, right? It's better to get taxed on, let's say, hypothetically, $1 billion rather than, getting taxed on like, let's say $100 million, right? So if I sell it now and I get the billion, and 10 years from now it's going to be $100 million valuation. Hypothetically, I'm not saying this is specifically for Tesla. I'd rather just take the billion and get taxed on that. I don't really care about that. Hopefully that answers that question. This is the comment that just like threw me off. I just saw it with my eyes and I was like, what the heck is going on here? What is going on in the comment section? I think it's hilarious. All right. So I guess this is where the content is coming from. Fabio's parents have money, not Fabio. I'm not an it. Don't misgender me, BP. That is where I draw the line. Mike Stathis is the man, a true red-blooded American. It's the mix. It's the mix of this beer. This beer is actually a 12%. We can get sloshed on this thing. So mix of the beer and me reading that comment was absolutely amazing. That was absolutely amazing. Oh gosh, I'm not gonna bring that one up, but that's really funny, JP. I see Spaceland's trying to set up another one. I see you, Spaceland. Racing horses. Okay, what do you think about the Canadian oil companies? People love Enbridge in particular. Enbridge, I think, is the MLP. I think it is. Let me not spew misinformation. Let me make sure that Enbridge stock. Pretty sure it's an MLP. Yeah, it's the pipeline. So this is the MLP. All right, good. My memory did not fail me. So the thing, okay, so there's a benefit to these pipelines. Pipelines don't really care too much about the price of the commodity per se. So the price comes down. This is actually the bull case for them when prices come down for oil. They don't really care. They already signed their contracts. It's about transportation costs. I mean, I assume some of them sometimes can make some sort of royalty agreement or a percentage-based cost, but for the most part, they're a little safer than the oil companies when regarding to a scenario of declining oil prices. And then same goes with rising oil prices. You see that Enbridge, for example, did not benefit to nearly the same extent as something like ConocoPhillips did from the rising prices, or something like Occidental Petroleum, which benefited the most because they had terrible balance sheet and stuff. So they had the most to gain, or one of the most to gain. Enbridge, the benefit then is that in competition is stifled, and in that sense, you want less pipelines. You don't want more pipelines. You want less pipelines because that makes current pipelines more valuable. Okay, so yes. How many Canadians do I have in this chat? I'm getting a lot of Canadian questions. All the great Canadian companies, all-time highs. Hard to yeah. That's the thing. It's hard to find deals. But yeah. But yeah. Okay, so I'm getting more comments because these comments are directly towards me, guys. So gotta say. So if you know how to read and comprehend, you would know that I'm referring to Venezuelans in the 2000s stealing money. That would be implied to be Fabio's parents, not Fabio. Well, my parents were, I mean, they were pretty young. I don't know if they were exactly at the age group of stealing money. But yeah, further context, he's referring to the Chavistas. All right. So the Chavistas absolutely did do that. Um, so, and again, like I say, he's BP. Don't worry, you can say and hold this belief. Um, I mean, as to all fair and point, I'll say that the statement is false towards me directly, right? It's a funny comment because my dad is probably really anti-Chavista, so he has a more of a temper than I do. I have no temper in comparison, but yeah, he would find that comment more or less offensive, probably. But um, it's fine, by me saying that, that's not going to prove anything. But yeah, I would say that my parents personally were not in the Chavista group, but the context of what you're saying is absolutely true. There were a lot of Chavistas, and still currently are, that did benefit during that time period. If you talk to any Venezuelan, they'll kind of tell you that. And also one other thing, the I'm also known as kind of like Italian blooded Venezuelan, and we were kind of like one of the more ostracized groups in Venezuela. So yeah, we were not looked upon very kindly in Venezuela. So the new government, for more context, the newer government that came in was very uh, more pro what they called like more pure blooded Venezuelans. There were some like racial elements to it, so there was actually really no place for like people like my parents to have that level of involvement. But yeah, like what he's saying also within the context of when it occurred, this did happen, just so everyone knows. Okay. But if you see a Venezuelan within the United States, they may have made their money here in the United States, right? Doesn't mean that if they're wealthy. Now, if you go down to the Miami area, the probabilities increase significantly. And if they say they more recently came from Venezuela, yeah, and they have a lot of money. Yeah, you can kind of put two and two together, and then BP's kind of right in that sense. Okay. Um, you guys are going back and forth here. I love it. I bought an American small. Okay, so CDEV in the summer 2020 have been very well. I wish I'd bought Enridge for long term. So yeah, Enridge is done more of like an income producing stock. It's not something that I would get for like something like total returns. It's not even like a type of business that I really particularly like per se, but I see the appeal to it within some people's portfolios, right? It's not something that for my portfolio, but I see the appeal. Okay, so looking into a month manga is a broke loser in your okay, so let's skipping over those because you guys are having your own conversation there. I heard. Okay, still going on with the conversation there. Okay. No worries, MP. No worries. All right, so more comments about Venezuela. This is turning into like a context video on Venezuela. But anyway, regardless, yeah, there's I mean, I guess now that information is a little bit more out there about Venezuelan history and like a little bit of the political structure within Venezuela. But looking at I guess what else other changes? I mean, I already completed the change, by the way, from Prosus, Tencent and Prosus. That's already changed in the portfolio. And for those of you who are unaware of that or new to the change for that, and I see your comment, George. I'll get to in a second. The reason why I was down on Tencent, right? And then Prosus is a holding company. There's always going to be a level of discount between the holding company and its holdings. So I don't actually think it's going to close up fully, right? Some people think that, but I don't think so. But I think it can close somewhat. And then my personal opinion again is there's two reasons for owning the Chinese VIEs in my personal portfolio, not for your personal portfolio. These are the reasons I have for myself. and they include the following. One is YouTube accountability. So when I talk about them and the problems I have with their overall underlying structure and the implications of it and all that, if they do collapse, I don't want anyone to think that I'm enjoying it. I'll put some money in to suffer alongside. But then simultaneously, I'm not like a masochist who just does things to just throw away money, right? I don't just burn money away. I do actually legitimately believe that the Chinese government would have changed and will change sentiment and actually drive. And what I use the word, for those of you who've seen my videos over and over and over again, I use the word coddle the investor base. So they're going to call the investor base. And actually, the day after I made that video, when I mentioned that they're going to coddle, or I think they're going to coddle, the very next day, the announcements came out that the Chinese government was indeed trying to, or making statements, kind of easing the sentiment around the investor base. All right. So then Alibaba went from having a net loss. So I think now I'm positive on Alibaba. And I still think I will end up being quite positive on Alibaba with greater fool theory and stuff like that. But yeah, the idea behind Prosus is that, okay, I'll take the loss on Tencent, benefit that to my taxes and write that off. And then I can actually rebuy similar asset, which should follow it in terms of a correlation, right? Almost at the same correlation, and might even outperform if there is an easement. It won't get up to the NAV value, but there could be a movement upwards in greater proportion to the underlying asset, because Prosus is a foreign holding company, and if they appease or ease the sentiment around foreign ownership of these assets, that could then draw sentiment greater for Prosus, and Prosus has more to gain in that scenario than the underlying value of Tencent itself. Hope that explains that. All right, and I see some questions, and I want to get to your comment. Another MLP for you is EPD. Thoughts on that one? I think that's more or less the same thing. All these MLPs, there was one stock that I had in, I have a custodian account that was for my sister. And in there, I actually invested a lot into this company called Texas. They were Texas Land Trust, I think was their name. She doesn't hold it anymore, but it was a very, very good performer. Texas Pacific, I think it's Texas Pacific Land Trust. Yeah. Texas Pacific Land Corp now, because it was a trust before. And I remember, and she's out of it now. I was extremely good performer. Oh, wow. I didn't even notice it came back down and then kind of came back up again. Yeah, I stopped paying attention to it, but it was a one that was beaten down by the pandemic, and she literally that was her pandemic investment. And they make royalties. Similar thesis as to why I had ConocoPhillips. I had put her into Texas Pacific Land Trust, and I think she did fairly well. And now they converted over to a C corp instead of an MLP, which they were. And this was an MLP that I did like. I tend to not like too many MLPs, even though they have some tax benefits. You should talk to your tax professional about what those tax benefits are, because your situation could be very different, and the specifics of how it would operate within your own position. So I won't really get into that kind of stuff. But yeah, most MLPs, there's rules of what you have to be, or what your business has to be engaged in for you to allow to be classified as an MLP. And some of those is pipelines, energy, stuff like that. So EPD, I think just by looking at it, it's another pipeline. EPDs. Let me take a look. Yeah. This is another pipeline stock. So high income in terms of 7% yielder, but similar thesis. Like you gotta be careful with these, understand what they're made for. But yeah. Okay, so one of these other comments. I was wondering, is there anything you would never invest in, and why? Oil tankers. I've had this question a lot of times, so I'm getting better at answering them. Oil tankers, wouldn't invest in those. This beer gets better and better the warmer it gets. It's amazing. Yeah, oil tankers, and anything with what I consider to be low barrier to entry, or no barrier to entry, not low, no barrier to entry, where anyone can just kind of step up shop and you have nothing that really differentiates yourself from another. I tend to avoid retail companies such as, things that sell clothing and stuff like that. LVMH is like the only one that I'd really love to own. What do you get when you mix? Okay, so Venezuela. Fabio, I need less of you civilly answering people's questions and more of you hyping up Mike's status roasts. Well, here I am. Oh my gosh, you guys are all let's this is turning into a Stathinian comment section. All right, what's this? I bought PSX Phillips 66 a while ago. They are a big refiner and a producer of petrochemicals, Mid-Eastern exposure. There since they are absurd. They're midstream company. You say Phillips 66 partners. I mean, yeah, Phillips 66, weren't they owned by Berkshire Hathaway? I'm pretty sure that is true. Oh my God, sorry. The laugh is not for that, but yeah, I think they actually were the one that was owned by Warren Buffett. But yeah. Okay, so PSX for a long time. Okay, good. So I was correct. All right, so let me actually I'm going to pull up the capital mindset portfolio. I do think that let me just have this open so I don't misquote percentages and stuff like that. I'm trying to remember. Yeah, because Adobe. How could I forget about Adobe? I mean, I added some Adobe, a small piece in Adobe, and I think I really like Adobe. I like Adobe as a business. I don't really like their price too much. Like it's an okay price. It's not really like it's not like, oh my gosh, I have to have this right now at these prices, but it's a business I do like. Okay, so do I think high inflation environment debt will be seen as an asset for many corporations? Well, they have. You could say that they have. And it's never going to be an asset. Okay, debt will never ever be an asset per se. It will just be reduction to the liability terminal value. So the terminal value of that liability will just be reduced. However, then there gets to the question of how much damage will occur, because in a hyperinflationary environment, let's say hyperinflation happens, that doesn't necessarily mean that you're going to make a lot more money to pay off the debt. That doesn't necessarily mean that your business might be the one that gets cut and killed in that environment. So a lot of people think that hyperinflation environment is like debt forgiveness jubilee. Everyone just gets forgiven their debts and no one gets killed off, right? That's not what occurs, and people get surprised by that. And it gets back down to that economics is a very complicated multi-layered cake. Once you crack one layer, there's another layer and another layer and another layer. And then so once you make a predictive measure based off of a single piece of the analysis, then you find out, well, I was wrong, and it's because you didn't pay attention to this other factor on this other side, right? So it always surprises people, but speaking about hyperinflation or high inflationary, you would think that's debt's good. Well, debt's never good. That's always a liability. It just reduces the liability. Okay. Um, there's some comments going on that are pretty funny to say the least. I say that rising rates, though, getting to rising rates. I think that my contribution to that discussion would be that I prefer to hold insurance businesses in a rising rate environment, not necessarily banks. I know common wisdom says that banks are really growing during rising rate. I would that I would say that I would prefer insurance businesses. Banks per se benefit, and I think primary dealers specifically benefit from a greater proportion of something like QE. QE is in a lot of ways sometimes consider like free money, because you're basically swapping out the liabilities and you're going to just focus on that pristine collateral, and that's about it. And you're at the end of the day, you're not actually using your money, you're using your depositors' money, right? All the money that you make off of it is great. It's free money, right? At the end of the day. And if you can get assets that cost nothing, right? Or assets that you won't really necessarily carry the liabilities for, and you won't have any legal repercussions because you're doing what you're supposed to do. That's great. Oh my gosh. All right. But anyways, that's my comment there. My exposure to insurance businesses is Unum Group, and I own them for quite a long time now. I think all of my gains now are long-term capital gains. Um, oh yeah, and Thor Industries. Look at that. Thor's down to 78. Get to buy some more Thor. But Thor, I made like one just larger purchase, and then I'm waiting. Thor is one that I'm not going to really be nibbling. I'm just going to be buying in like tranches, right? And then they're kind of like a counter exposure that I have to something that's more so focused on consumer spending on that stuff. So, because I have a lot of positions right now that would benefit if consumer spending does come down a bit. So I'm waiting on that, and then Airjet Rocketdyne. Oh, that's making some moves now. It's up to 40. Dropbox is stable, more or less. Not really doing much. Only up 40-ish. Well, almost 40% there. Markel's been roaring. I've been waiting. That one's been a patient one. And then again, Molson Coors Brewery right here. Drinking their product, really good, in my opinion. Completely non-biased there. I found out that they made this, so then I was happy. But all right, so let's see what we have. Some comments right here. Thoughts on the tobacco sector value? Apparently, best I think is BTI. Yeah, BTI right now is the cheapest of all of them, and I think they are the cheapest of all. No, they're the cheapest of the big boys. I think there's a smaller one that is cheaper. BTI is cheaper, I think, because it's not American. If you want my honest opinion, they're the British one, British American Tobacco. They have a lot of business. They have a lot of business in Europe. They have a lot of business in the United States. And Altria, for example, MO, ticker symbol MO, is a strictly United States or an American-based cigarette company. And Philip Morris, their counterpart, is the international version of Altria, right? They were once one company, they split off. So yeah, BTI I think is the cheapest one. I have nothing against cigarettes. I'm not like a moralist investor per se like that. So if they're a good value, why not? I won't judge you for you buying them, and I won't judge myself for really buying them. The only companies, if like a cartel was publicly traded, maybe I'd judge you. Human trafficking and stuff like that. Maybe a little bit of judge there. But on something like a cigarette company, no, not really any judgment there. Are you looking at any restaurant stocks? I have some restaurant stocks. Hesitant to even mentioning them because some of them are microcap-ish-esque. But I'll tell you one of them that the thesis is quite literally, I like their custard shakes. Yes, it is a really stupid thesis, but I hold and reserve my ability to have a fun stock, and it is a fun stock. So before I say its name, I want to be very clear: it is a fun stock, and no, I will not be selling it. I will literally carry it to zero because it's just a fun stock. I'll say it again: it's a fun stock. All right, and now that I've said that many times, the company is BurgerFi. BurgerFi, ticker symbol BFI. It is currently sitting at $3.90 since the close, and I am down 11.76%. It is 0.16% of my portfolio. Thesis, fun. That's it. And then another restaurant stock that I hold is Barbecue Holdings. Now that one's more like, I think it has potential. Again, not making a video on that because it's a micro cap, but yeah, those are the two restaurant stocks I have. Now, as far as restaurant stocks as a sector, the one I would love to own is Chipotle Mexican Grill. Chipotle Mexican Grill. Now that's a place I go to a lot. I'll tell you that. I am definitely in their top 10,000 customers. Definitely. Because I'm just kind of being broad based in that approach. But yes. By the way, I see a lot of you are talking to each other, but I'll have an announcement for you guys soon that you guys can all become best of buds. All right. I see like a little community growing here. So here's a question to me. Every time I see the ad fog, I just click it. So would you agree Buffett is trash? He made shady deals in circa 2008, lost billions in airlines, oil, VZ, and worse. He cheated on his way. He cheated on his wife. I didn't know that. I wouldn't say he's a trash investor. I mean, I think we can have different opinions on that. But I'd say that, you know, he's done well for himself. And are you referring to his deals with the banks? Because the deals with the banks was pretty much because he had lots of capital and they were strapped for cash. They wanted cash. I would, you know, maybe concede a point that Buffett is good politician in a lot of sense, you know, in the sense that he can be very diplomatic and regulators, he can get along with him. His airline trade, you know, but the thing is, would I be the one, like if I was in his position, then I go back to the question, would I hold airlines during that uncertainty? No, because I know I wouldn't hold the airlines now. So I'd say I can't criticize him on that because I wouldn't hold the airlines. I wouldn't have held them because I wouldn't buy them now, right? Now that the picture is better. Oh, of course. This is where maybe I concede a point here, right? Would I have bought airlines ever? No, I don't like airlines. But, you know, he believed what he believed. Then there's his other investments that are pretty good. Oil and Verizon. Verizon, though, is like a bond proxy. I mean, we don't know what strategy it plays within a portfolio. In terms of portfolio or constructing a portfolio, you have to think of portfolio strategy. So positions can play a strategy within the portfolio. It's not necessarily that, oh, all positions in the portfolio must make gains during this time because, you know, there's different events that one position could benefit over another. And if you have a diversified portfolio and strategically placed in that sense, you know, you could have a benefit on that. Lithium, I had a love affair with a company called Albemarle. Don't own them anymore. The thesis back then was I'll buy the picks and shovels and I won't buy the EVs. If I had just bought Tesla, I would have just made a lot of money. Oh, if only I could buy Tesla. I'm kidding. I don't regret buying Albemarle and then making my profits on Albemarle, but yes. Oh, yeah. This is a great company. Unfortunately, their CEO passed away. He offed himself. And but yeah, very good company. I actually really like the restaurant. In fact, I'm gonna propose it to my group that we go hit up Texas Roadhouse sometime because I think that it's a fun place, fun environment. Tap baby. Oh yes. Oh, good. I'm glad you're enjoying my products. All right, JP. I'm glad you're enjoying my products. I'm the owner of Molson Coors Brewery. Each time you drink any of my products, I thank you. Except if it's Topo Chico non-alcoholic, it's actually not. That's owned by Coca-Cola. Only the alcoholic variant of Topo Chico is Molson Coors. All right. I love it. I'm a Zoomer. Okay, you're a Zoomer. Still love Intel. I mean, I like Intel. I want Intel, but I want it at a good price. I agree with their investments. I just didn't agree with how they were allocating that capital to invest in those things. But I agree with their investments necessary. In fact, I have a new computer right here in front of me. You know what chip I bought? Some of you are going to hate me for this comment because some of you are Team Red. Well, I went with Team Blue in this instance, and I bought the Intel i9 12th generation. So that's what's in here right now. And I'm enjoying it so far. It's doing the job. It's doing what it was designed to do. It's working every day. Doesn't complain. Doesn't go to sleep. Doesn't take breaks. No vacations. Just works for me day in, day out. All right. So if you're saying a cartel is trading at 0.1 free cash flow and growing double digits, I would be tempted. Right? I would be tempted to do it. But, you know, like we're assuming in a world, by the way, it's publicly traded. Therefore, you know, whatever they're doing is private. Not private, legal and all that. Dang, because I don't know, because I'd be living in a society that like probably you know, saying that's completely okay. So I don't know where my moral compass would be because my moral compass would probably be different in that, you know, scenario. So maybe I would. I don't know. I won't say that I absolutely wouldn't, but maybe I would. So does your investing strategy include cash secured puts? Yes, it does. Occasionally, yes, it does. Depending on the company. Or do you wait for the price to start? No. Like, yeah. So to answer the whole question, and then how do you try to get income from your cash position? No, that I sell puts, right? Or I roll them over into very short-term duration bonds, very short-term duration treasury securities, and like very short-term duration. If I really want to, and I don't want to do like the put strategy, or I just hold it as cash. But that's like your penny squishing, right? Is it worth my time to go on treasury.gov and then buy those puts and have not puts, sorry, treasuries and have them roll over? No, maybe not. Okay, so is he looking to drop? So I'll say that yes, there will be a Discord community drop. It's already designed. I had a guy that basically created it in full. I don't know if he's watching the stream. He lives in a different country. He's a full-time partner on this, and he's done a really good job. Austin's been working with him in conjunction. So on that Discord, you'll see Austin. Austin's really excited to really talk to everyone. So yeah, I'll provide more details at some point on it. But yeah, it was a question that was asked over and over and over again. Can I create a Discord? And so you guys could all talk to one another in a more centralized place, not just the comment sections and stuff. But yeah, but don't forget to buy my $20,000 a day course that's coming. Please don't forget. Remember, I thought about it. It was going to be $20,000 per second, but I thought, people can't do that. They got to buy Tesla's stock, not Tesla stock. Sorry, Tesla, the car. So I can't charge $20,000 a second. So I went with $20,000 per day. Is there really a difference between 1990 and 2001? Oh, you guys are talking about some random thing. Here I go, thinking there's a legitimate question in here, Spaceland, and you just get me like that. Molson, yes, that's another one. There are my MY products. Is this talking about something else? I don't know what MY products is. It was the seltzer, the Topo Chico water or Coke. Yeah. Okay, so it was a seltzer. Yeah. And what kind of Coke? What kind of Coke are you talking about? All right, so perhaps for your research list, Seth Klarman has recently. Okay, Fiserv. Now I got this one, Fiserv. So here's the thing with Fiserv. I got something for you here. All right, I got this right here for you, Adam. All right. So Fiserv, they have Clover. All right, so Clover is a payments platform, and they utilize. Well, I'm trying to see how I put this. They utilize they are like the software of the banks. Like they're the backend software. That's the main business of Fiserv. They bought Clover, I think, with their acquisition of First Data Corporation, and from that, there was the bullish case that Fiserv is, like competing against Square and stuff. Well, then, funnily enough, my banker tells me, Bank of America, my banker tells me, hey, Fabio, you wanna use our payments platform, right? They just kicked out Fiserv. I find out, right? And here I go going, wait a minute, you guys got rid of Fiserv. And I find this out, and I thought that was really interesting. So then I say, what has this been priced into Fiserv? Bank of America, I think, is one of the biggest banks, and they're a big client, and they're basically telling me right now, the banker is telling me that you want to use our products, and I say, wait, don't you guys use Fiserv? Why are you showing me this product? I say, well, no, we're getting rid of them, and I'm like thinking to myself, oh my gosh, Fiserv just lost Bank of America as a client, right? To what extent have they lost them as a client? And then he tells me, oh no, we're like in the process of completely doing everything in house that Fiserv was doing for us, so we can better control prices. Well, there's kind of my extra thoughts on Fiserv, right? Fiserv was an interesting company under the prospects that their business was irreplaceable by the same banks that they serviced. Now that that's maybe not the case, for me, the caution, the disc increase. So I still like Stevie Madden. All right, so let me phrase the cartel stock question this way: the decapitations are often, but so are the cash flow. I love that phrase. All right, the decapitations are often, but so are the cash flows. You buying? I mean, look, is it a legal business? Is all of the stuff still allowed? Again, if I'm living in that society, I don't know where my moral compass would be. Maybe because your moral compass in a lot of ways is an aggregation of the society you live in too. So if we're like completely okay with that as a society, I can't say no that I wouldn't invest in it. But the thing is, why would they need to decapitate if what they're doing is legal? Because usually they decapitate. I know I'm overthinking this. I know you're asking for a simple like, they are what they are now, but you can own shares in them. Would you buy? The answer probably would be no. But overthinking it, why would they need to decapitate in a society where it's legal and publicly traded and stuff like that? Because decapitation is an intimidation strategy, usually in order to encourage people to comply with them. Why would they be decapitating in such a society, right? Okay, so I know I'm overthinking it, but yeah, to answer your question the simple way, yeah, no, I wouldn't do it. Okay, so Discord, ha 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 ha. Mike Stathis was right about Fabio. All grifters. Well, here's like the little bit of the plot twist. The Discord, it's just a server, right? Don't forget to buy my course, BP. BP, it's a $20,000 course per second for Mike Stathis. No, I'm kidding. Just kidding. It's going to be $1,000 a year per $1,000 per year per minute of the video. Yeah, that's how I'm going to price it. $1,000 per year per minute of the video. All right, but anyway, yeah, no, the Discord's simply just the server that in which people can discuss. I'm going to have I don't know when I'm gonna launch it, but it's not a grift per se. I mean, I haven't even told you any details. You don't even know if it's free or not. But yeah, I can see that you think that. But we get back down to the question. Mike Stathis. No, I'm not even gonna say that. Between QSR and MTY, which one would you choose? Wait, hold on. That's a stock I do not know off the top of my head for some reason. MTY. I gotta remind myself. Who is that? Who's that? MTY Food Group, Canadian franchise area operator. What? I don't know anything about their brands. Do I know their brands? What brands do you own? What brands? I have no idea. What the heck is this? Do I know any of these? Oh, wow. They own a lot of brands. Oh, my gosh. Here I thought all these were small companies, small little. No, I'm kidding. I haven't heard like of the majority of these. Maybe Mike's. No. That's the different kind of Mike's. I've never heard of any of these companies. Haven't experienced a single one of them. I'll tell you that. That doesn't mean it's good or bad. Just don't know. Then I know that the other one you mentioned was QSR. I think I'd be why just because I don't like QSR. QSR owns not BurgerFi, but Burger King, Popeyes, and Tim Hortons, something like that, a Canadian company. So they're both. Yeah, I think QSR is Canadian. No, don't quote me on that. But the point is, I think I'd choose MTY just because I don't like QSR. Yeah, but completely biased. All right, so I only buy hydrogen stocks. That's funny. CSGP was bought by Chuck. Okay, so CSGP. Just to remind myself, who's this? CoStar Group. CoStar. Oh, this is actually, I know this. This is on the list. I'm going to actually review this stock, but this one's on the list. So with supply chain issues, do you see companies investing more into inventory and where? Yes, I think over inventory allocation is probably going to be a problem. It's going to probably draw down prices quite a bit and pull a lot of demand forward for that inventory. But there's also the perspective that a lot of companies are just ordering a ton just to see what comes in, right? So there we go. It is an arbitrage play. How confident are you that it will go through? If you're very confident, it's very interesting. If you're not very confident, be careful because it will go down if it doesn't go through. Oh my gosh, what is being said? I am not highlighting that comment, but that is. Yes. So just remember, everyone, please, when the course is released, $20,000 a minute. Sorry, a day is all I ask. The big ask was the $20,000 a second. I'll bring that down a bit. $20,000 per day. You don't own the course. As soon as you stop paying $20K per day, you're not going to have access to it. All right. So during the day, okay. So assuming they were at a price you'd buy, not current prices. Oh, okay, Martin. This question had further context, I guess. Oh, I apologize. Did I not see it? I might have not seen it. Martin, what was the previous context for your question? I apologize. I don't see it for some reason. What is going on? All right, anyways. All right, so the Bible is made up. Oh, okay. It's a question. Okay. Oh, well, here we go. LVMH. LVMH, all the way through. Go big or go home, in that opinion, or in that aspect. I think LVMH is almost like a vertically integrated woman selling company, moneymaker, printer thing. I would love nothing more than to own LVMH. That is the one retail company I'd buy all the time, every day. Okay, so 20K Venezuelan bolivares percent. Yeah, yeah. I don't know how. Well, probably like old bolivares or whatever. Yeah, actual bolivares. But N- this is even better. Oh my gosh, you guys are on the business council for Capital Mindset. What if you actually sell people the course, but more of a contract for the course that you may be able to take one day in the future? No, that is just so funny. No, I create a whole VIE structure for the course, and like you don't even own the course, you can sell the course, guys. Capital Mindset NFT, Capital Mindset NFT, redeemable for a course, and you have to pay rent on this NFT, right? You have to pay rent on this NFT that then gives access to a course, and the rent is $20,000 per day. Amazing. Best asset ever. Yeah. So yeah, I think for example, LVMH, we saw that they basically pulled political strings to like reverse that price on what was it, Tiffany's jewelers. So that was pretty interesting. All right. So I'll buy calls on the course. Yes, buy call options. That's the only way to do it. All in on these. We're buying a VIE on a non-income producing asset. Well, uh cheesy to say. You got to invest in yourself, bro. You got to invest in the mind. The classic sales pitch for courses over the past 5-6 years. You got to invest in yourself, man. All right. This wait, what hits like a blunt? Yeah. So well, if you're talking about this is it's pretty good, pretty strong beer, pretty good. I like it a lot. um Yeah, but I've never heard of this MITY group that you guys gave me. Um, I have to really. I mean, I literally have not been to any of these. Oh, Cold Stone. No, I've been to Cold Stone. They have Cold Stone, huh? And Pinkberry. Well, that's my wife already liking them. Planet Smoothie. Oh, look at that. Never mind. I've been to some of these. Wow, there's a lot of brands. I mean, I'll take a good look at this. I'm actually gonna write this one down, and I'll make a video on this one. Here we go. MTY group. All right. Hey guys. Okay. So thoughts on the opportunity cost? How much you pursue usually? Thanks. Okay. So thoughts on opportunity cost? Okay. The Daily Show with Trevor Noah. Is that what the T stands for? Just kidding. But uh, what what do you mean by how much do I pursue? Answer me that question, and I can answer your question back. Yes, VIEs for that course. When I feel sad, I just listen to intro music of oh, thank you. Thank you. Yeah, I like the intro music too. It is quite catchy. I do I chose it for a reason. I did like it, but it's like a jazzy feel. Oh wait, does it concern you that you own shares of companies that have majority of their factories in China? If you're afraid about VIE structure and ownership, do these companies really own those factories? Well, which companies are you specifically referring to? Is it Magna International? Is it 3M? Uh, because at the end of the day, I don't even think they own the factories at all. I think they actually contract that out. And then the thing is, factors of production or factories, they can switch those not on a dime, but quickly enough. It's just as quickly as they got out of the United States, they can get out of China. And I think a lot of them are trying to focus on that. Like Vietnam is becoming a huge place for investment and production. I think Thailand maybe a little bit, but Southeast Asia in general. China is no longer the most attractive place to build production. But I see your point, and this is actually where I'll add to you. What you're saying is absolutely correct, and I say this actually quite frequently. Where I go a little farther than that. I go farther is to say I actually discount depending on what kind of business a company does in China, because depending on the type of business they do in China, they may not even be able to get their capital out, subject to approval, of course, regulatory approval. So that each time they are subject to the whims of the powers that be, that they can even move the capital out. So I'll point to an example as Wynn Resorts. Wynn Resorts in Las Vegas Sands. Wynn Resorts has they actually are very nice in the fact that they separate the cash piles. They say, well, this is our cash pile everywhere else in the world, and then this is our cash pile in China. Okay, so there's a reason why they do that, right? And the reason being is that there are capital restrictions as to transferring money out of China. Just because when you make the money in China, right? At that point, you are subject to the potential of capital restrictions, which is if the regulatory body decides you're not moving your money. Well, you're not moving your money. So that's a risk, because how valuable is that money as long as it cannot be transferred? And here's the other thing. A lot of people don't know this, but I don't even know if I should say this. I'd be careful actually what I say about that. um, I'll refrain from saying this part, but a lot of people maybe don't consider the full risk potential of cash piles in China and how businesses make their money in China. I'll say to shout out a much larger creator who completely unrelated type of channel, but makes good little documentaries all by himself, or maybe not by himself, but whatever in his team, or maybe he does a team. I don't like all his videos, but I think sometimes he makes really good content. But I think he made a really good one on Tesla. Didn't touch on every point, but Jake Tran made a great one on Tesla. It gives a different perspective from what you would see on something like CNBC. So, how much sleep do you get on average per night? Swear you constantly are grinding. I don't know. I get a good amount of sleep. I mean, right now it's 11:42 and it's on a Sunday, but Mondays are typically a chill day. Mondays are pretty chill, so it's fine to be here. I think I get minimum on a bad day like 6 hours minimum, and then a good day, I'll get a solid 12 hours. So on a really good day, on the sleep-in days, I feel sad. Yeah. What do you say again? Requested Fabio. Blue hat. What it looks like. Look at blue hat when he looks at. Okay, so I'll put them next to each other. So Fami and blue hat. Fami and blue hat. Oh, didn't mean to do that. I'll look at both of those together for you. And then by the Friday live stream, which I think you guys didn't notice, I didn't have Investing Sucks. We had to reschedule. He had a very busy week. So we moved it to this Friday. So this Friday is when we are having the guest on the show. That's another company trading up below liquidation, but might be a rug pull. Are these Chinese stocks? Yeah. All right. Oh, here's I think about Chinese rug pulls as from arbitrage. They are taking money where it shouldn't be, which is us having it and transferring it to you. Yeah. Okay. So now that question, that kind of answers my question. Those probably are Chinese stocks, and they're probably trading below enterprise value. And in which case, I'll tell you there's a reason why, and I would never touch them with a 10-foot pole. And they are microcosms of the other larger Chinese VIEs. They are microcosms of those. Okay. So that's what I'll say about that. All right. So, hey, Fabio, is the investment industry starting to use machine learning, artificial intelligence to pick stocks? Seems like a perfect use case for this tech. Yeah, except it's not really like. Here's the thing. Even like when I produce the final version of the software for you guys, and or when you guys create your own tools for investing, they're just tools at the end of the day. They're not going to replace you. And even if you can program something, right, to behave or think about or do those calculations and make judgments on it, it doesn't replace the artistic aspect of investing, because investing is an art and a science. It's almost like almost equal in that aspect, that it is as much of an art as it is a science. And so I'd lean on more science than an art, but it is also an art. Until machines can like imagine, I think you're fine in terms of replaceability. And yeah, that's pretty much, I've had this discussion a lot with other people. Pretty much the conclusion is always the same: until machines can imagine, right? In which case we have other things to worry about when they can imagine, because that implies that they've reached sentiency. But when they can imagine, then yeah, be afraid, or for everything else, because it's not just investing that's going to go away. And also the other thing is that the way that you can kind of program machine learning is off of a certain set of parameters, from my understanding. It basically runs the same thing over and over again and tries to improve in the goal that you kind of give it, but under specific parameters, not simply like it thinks entirely for itself, right? The term machine learning, we're not really there yet. Some people think machine learning is something that it's really not. What is rising interest rates? What about buying a bank that has insurance company as their subsidiary? Best of both worlds. Yeah, except like I said, like with banks, I like to focus on the primary dealers, and from there, I look at, for example, what the Federal Reserve is doing with like their QE programs, because I think that's really good for primary dealers. That's like free money. But I'd rather get a bank that is one of the best banks, and then an insurance company that's one of the best insurances. Now, as I just said that, you might be thinking, oh, wait, Unum is not one of the best insurers. You're right. Unum is not one of the best insurers. I have Markel that is a better insurer than Unum. And then Berkshire Hathaway is like one of the best insurers. And Progressive and United Health, right? These are all much better. Cigna Health, Anthem, all these are much better insurance companies than Unum. Unum's like bottom of the list in comparison to these companies. So yeah, I agree with that. But I'd rather have the best bank and the best insurer than just a bank that is somewhat of a okay and somewhat of okay in that. But Berkshire Hathaway technically owns Bank of America and Geico, fully Geico and partial of Bank of America. All right, so Baba and maybe one or more are the only ones I would trust. I wouldn't touch most of them. Well, always in my analysis of these companies, I never, ever, ever take into account that they might be fraudulent. I don't take that into account. Actually, a good documentary for everyone to watch on your spare time, kind of like easy to digest. It was designed to be easy to digest. I hope you know what I mean by that. When it's easy to digest information, is the China Hustle. It doesn't go as in depth into a lot of topics as I would like, but it gives everyone a basic understanding, very basic understanding of what is a concern. Very basic, but good enough, very easy for the mass audience to digest. And it's free on YouTube. It's completely free. All right, so why I'm asking liquidation value. Oh, okay, that's not towards me. I remember mentioning Leggett and Platt. Did you ever check them out? I found them interesting as well. Yes, and I'm going to do a video on them. Just trying to be catching up on some stuff. Leggett and Platt is interesting business. A lot of history behind that company. And I mean, I do like the business. I'll say that. I do like the business. Joke Tran title be like Chuck E. Cheese, the most evil kids. Yeah. So that's what I'm saying. It's like he has some good stuff, and then he puts out some like weird stuff that sometimes I think it's like his research sometimes can be a little bit surface level. Coming from my perspective and background, that's my opinion. And then he geared his content more towards mass audience consumption, which is making these broad claims on some specific instances. But yes, okay, so they are Chinese. Awesome. Nope, I'm just a fan. Reserve. They may look for about 15% for buying stocks. Okay, so you're just a fan. I thought we had Trevor Noah right here in the comments section. All right, so from what I observed, maybe we look for a 15% from buying stocks. Is this correct? I tried to understand the point of view and decision to buy new stocks. Oh, okay, so yeah, well, I'll say it entirely depends. Because also in that discount, I'm also implying some levels of margin of safety. And it's contingent on me being confident with the cash flows I perceive of the future, right? If the less confident I am, the greater the margin of safety I is, and if it's basically says it's not within my buy zone, I don't care, doesn't matter to me. Okay, hypothetical scenario: China declares sanctions on Western countries. No more cheap good going to be exported out. Could the collapse of the West, that is consumer economy and service economy? No, not at all. And China knows that. That's why China's not doing that, right? That's not China's end goal. China has to convince the rest of the world, which is like the productive capacity of the world, to stop accepting the world reserve currency. The issue is in this hypothetical scenario is that China is basically cutting out the world reserve currencies. They would absolutely demolish their economy in no time. And they will find that they are far more replaceable than they understand. No, not that they understand. They understand this. This is why they've done what they've done, right? They are like the West needs, or China needs the West more than the West needs China. I know that's probably counterintuitive to what you hear on CNBC and all that, but yeah, it's true. You don't want to underestimate the importance and power of the Eurodollar banking system and the power reserve currency status has. And when I say reserve currency status, I'm not talking about the Eurodollar banking system, not just the dollar. I'm also talking about the euro. So I just saw a weird comment. Oh my gosh. Sorry, it just threw me off. You need to understand that, like, for example, China blocks out the West. The West has all the demand. China's point is to service that demand. The West will find other places to service that demand. China in and of itself isn't the demand. They are the production. They are the suppliers. If they don't supply, others will. That is why they're taking steps to get the producers as a whole to try to reject those currencies. And then in that sense, that could be a problem. So that's why, like I mentioned in the previous comment, and I mentioned this last week in the live stream with Strongman, that that's China's end game with everything. Look at Belt and Road and all that influence in Latin America. They're trying to get the world's global producers to slowly ease off the dollar. If that's possible, maybe, I don't know. No, definitely not. Definitely not. I don't want to talk bad, but they're having some problems with algebra. I like getting rug pulled by Chinese companies. I think the Chinese companies' successors are productive well for their families. I know you're that's so funny. Hypothetical scenario. Hear me out. Mike Stathis is actually yes, this is so good. Mike Stat. All right. Correction, Fabio. China understands they want the West more than the West understands they cannot survive without China. Well, you see, like here's the thing. When you start to get or understand, like, why does China engage in this whole VIE nonsense? They need the West. When you start to understand why China doesn't more threaten, just not giving us things, it's because they need the United States. They need specifically the United States, Europe too, but they need the United States. Again, like China, if they didn't need the West, they wouldn't IPO in our markets. They just wouldn't do it. They need us. They absolutely need us to build up. And then they'll get to us. All right. So, all right, guys, I'm going to close off the stream here. Thank you guys so much for joining me tonight. I'll see you guys later on this week. Hopefully you guys enjoy this live stream answering questions. And yeah, I'll see you guys in the next video. All right, guys, have a good night.